I'm Share Navigator, and we're going to place a trade here on AMAT, and I'm just going to talk you through it at the moment. So, couple of things. AMAT, we need to really go and have a look at what they're doing in terms of price movement at the moment. So here's a chart of it. And we can see that over the last 52 weeks, it's traded as low as about 19 right up to a high of just below 26. So automatically now I'm starting to think about my option position here. It's under a bit of pressure lately. There was a merger announcement there not so long ago, and the share price is under a small bit of pressure. And that's obviously creating the opportunity because, as you can see down here, implied volatility is now up near its high for the year. The great thing about AMAT as well, their earnings aren't out until the end of May, which means we can place a trade here for the middle of May and not be affected by the jump in option volatility for the options that are going to expire after the earnings announcement. So we're going to target here the May 15th expiry on the options. So first thing I see here, I'm looking for a trade, an options trade that's going to get me my break even somewhere between 19 and 26. That's what I'm looking for right now. I like the idea that implied volatility is high, so I'm going to look at placing a strangle on this trade. So a strangle is when you sell a short put. We're going to look at the $20 strike. So basically, in order for us to win on this side of the trade, we need AMAT between now and the 15th of May to stay above $20. It hasn't been below $20 in about 6 months. And the other side of the trade is a short call at the $26 strike, and we want AMAT to finish below 26. So to cut a long story short, we really want this stock to get full profit to trade somewhere between 20 and 26. So just to give you a little bit of comfort about AMAT and what type of a stock it is and how it trades, we're just going to bring up the report on it that we have here. You can see that it's a financially strong stock. It's A-rated. They're due to forecasted to make earnings in the region of 145, and at the moment the shares are trading at about $22. So just multiplying on forward earnings, it's trading at less than 15 times forward earnings, which I think is fairly valued. It's attractively valued, so I wouldn't be too worried about a fall in the shares here. So in terms of a fundamental analysis of this, I'm not too worried about AMAT. In terms of going forward, can't see it getting above $26 until after that earnings announcement. So I'm happy enough to start looking at placing that trade right now. So we're going to do 5 contracts. What you're looking at now is the Interactive Brokers Trader Workstation. So this is slightly different. We've been using the web trader up until now, so we're going to use the Trader Workstation here, and we're going to put AMAT into our watch list. And as you can see, it's at $22 right now at the moment. So we're going to put in here in order to do a strangle, which is a short put and a short call. And we're going to look to do the May 15th expiry. And we're going to use the $20 and the $26 strike. So we're going to place that trade right now. So the first thing we do is click on Trading Tools, Spread Builder. So I'm just going to bring that into focus now for you. Okay, so you can see here at the moment on the right hand side we're given the option chains here. We're going to change a couple of things around. We know what strikes we want to pick, so I'm getting the $20 strike and I'm getting the $26 strike. So I'm happy with that, and I'm only interested in the May expiry, so look at May the 15th. And that's about a week before earnings, so I'm happy with that. So you can see here on the put side here, we're going to sell the $20 put. At the moment the spread is 10 cents, so we're going to haggle somewhere in the middle at 50 maybe, and then on the call side again the spread is about 11 cents and we're going to haggle somewhere in the middle. So actually I'm going to look here for about 75 cents in total credit for this particular trade. So in order to create the spread, I just drag one of these over here. I'm going to drag this over here. Okay, so I'm just going to change the actions. We're actually selling these. So it's a call strangle here. We're selling the $26 call. We're selling the $20 put. Now I'm going to do a quantity of 5 here because I believe that our risk on a contract basis here is going to be, you know, somewhere around $70, because if it breaks down to 18 it goes up above 27, and we're happy enough to place a trade here of 5 contracts. So we're going to do minus 0.75. So here's where we're dictating. The reason I'm putting on a minus, it's a credit spread. We're selling here, and we want to get at least $75 a contract here. Okay, so we're going to leave it as a day order. We're going to submit. The market is asking us, are you sure you want to place this trade? We're happy, we're sure, we're okay. We're going to put the trade into the system, and there we go, the trade is gone. So you can see the trade log is showing up here. We've already got one in play here at the moment. We've already got 2 filled, so we're waiting on 3 more to get filled. And you can see the commission here has only been $2.19. So we wait here, we'll just go into our pending all. You can see here we've only got 1 contract left to fill. We've got a position. We look at our portfolio, we'll see it down here shortly. Here we are down here. We've got 1 contract here, it's saying of each. And as they fill up, that will go up to 5. So we're going to stay there, and there's another one after filling up as we speak. So there we are. That's the reason why we placed this AMAT trade. All we want now is this employed volatility to contract. When it does contract to back to around 20-25%, we're going to go ahead and exit this particular trade. So we want this volatility to drop down to 30-35%. We'll exit the trade, or for the stock to trade in between $20 and $26, and we're still going to make a profit there. Okay, last thing I'm going to show you. I've done this on my own private account very recently there, so I'm just going to show you what it looks like in terms of a profit and loss. Here we go. So this is what I did. These are the premiums I got. Pretty similar after commissions. This is all after commissions. So you can see here, we make profit when the share trades between 19.27 and 26.73, and it has about a 70% chance of success in this particular position here. Alright, my name is Stephen Cox. This is Share Navigator. If you're not a member of Share Navigator and you would like to get access to some of these trades as we're doing them, just click on the right hand side of our website and you'll see the register button. You can start with a free trial and you'll be able to test our product free for 7 days. If you like it, the cost is just €50 a month thereafter. Okay, thank you. Bye for now.